Okay, friends. Very delighted to have one of my very good friends and partners, Ervin Williams from Credit Hub, with me to answer a bunch of questions about credit. So many times, if you're looking for a mortgage and trying to figure out how to navigate things in the mortgage space, whether you're trying to refinance or purchase an investment property, or if you're a first-time home buyer, there's a lot of things that are counterintuitive about credit. Or maybe you just need general information. So for those of you who don't know, my name is Aaron Leitz with Logical Loan. And my goal with this podcast is to provide you guys, the public, with good, no-nonsense information about things like credit, mortgage, home loans, refinance, and real estate in general. So, Ervin, thanks for joining us.
Hey, glad to be here, man. Thanks for having me, Aaron.
Awesome. So, let's jump right into it. I know, so many people out there, especially folks with credit challenges, they want to know perhaps one big thing is, how to start fixing their credit. But before we get into all the big stuff, tell us about you, who you are, and tell us a little bit about yourself.
Yeah, my name is Ervin. Listen, I've been in the credit world for over 13 years now. I spent time in the auto industry, mortgage industry. I've spent time just in sales in general. And it brought me, I saw a lot of people who were credit challenged. Specifically in the auto industry, I worked in the subprime department, and that's where I really got a full crash course of credit and what it means and how difficult it can be for people who have less than perfect credit to qualify for anything. So that's where I got my start in the credit world, and here I am today, helping people who have less than perfect credit qualify for those things that they want, that they couldn't have qualified if they didn't get credit repair.
Yeah, that's great. I think, you and I have talked, off camera and stuff, a lot about how credit scores work. I guess some of the big things I think we should start off is just talking about stuff that seems maybe basic to us, but like to a lot of folks, maybe they don't know. So one of the first questions I wrote down is, just in general, like from a 10,000 foot perspective, how are credit scores, created, or how are they scored in general?
Yeah, so there's about 5 factors that go into what makes up a credit score. I would say the 2 main factors are going to be payment history, of course, and credit utilization. Of course, there's also length of time that history was established. You also have the mix of accounts, what types of accounts. So all those things come into play when it comes to calculating a score. When you look at payment history and utilization, those things are, of course, weighted heavier, right? If you're missing payments, if you miss one payment, you'll drop your credit score more doing that than if you applied for a new credit card, for example. So, they're all weighted differently, but those are the main factors: payment history and utilization.
Okay. So, for example, let's say someone has not only less than perfect credit, but let's say somebody has, late payments on their credit report, be it, let's say credit cards or personal loans. What would be like a thing that you can let them know? Like, what are some of the first steps that somebody can start taking to repair their credit if they're trying to get a home loan?
Yeah, so it starts with, and I'll get into this later, but it really starts with the last moment, the last time that you made a payment on that account. The sooner you stop making payments on that account, the better it is for credit repair. Now, what are the first steps to take? Well, you can do it on your own, and I tell all my clients exactly how to do it on their own. That way, they don't have to hire me. Sure, if you want to hire me, fine, no problem. But the first step is doing an in-depth analysis of your credit report. What's there? What's hurting you? What's bringing your score under that threshold that would qualify you for that mortgage? And then maybe you do qualify for a mortgage at 580 or 600. What's keeping you from qualifying, from getting to that 620 or the 680 or whatever that score is that you want to qualify for the rate or for the loan that you want? So, it just do an in-depth credit audit, identifying those elements that are keeping your score under the threshold that you're looking for.
So the first thing that somebody would want to do is really look at their credit report and figure out, what's going on there in terms of their most recent late payments. Is that right?
Yeah. That's a good start. So if you're missing late payments, if you're like 30 days past due, maybe that's not hurting you as much as an account where you have 3, 4, 5, 6 missed payments on or late payments. So it's best to look at those first because that's gonna help you more if you're able to tackle that one first.
And would you recommend that people maybe download, a free copy of their credit report from someplace like annualcreditreport.com, or is there an app that you recommend somebody use to track their credit, or how would they navigate that, like in the best way that as a credit professional, how would you recommend that they go about it?
Yeah. So you could definitely go to freecreditreport.com. Everyone gets an annual credit report for free, so you don't have to pay. I'm the type of person where I like constant monitoring of my credit report. So I use sources like, although they're not as accurate, I use sources like Credit Karma, sources like Identity IQ. That's a good one. Those are paid. Credit Karma is a free one, and of course, Identity IQ is a paid service. But I don't think you can go wrong. It just depends on whatever your budget is. But get a credit monitoring service as well. That way, you can consistently monitor what's going on with your credit. So yeah, you definitely want to get a credit report from somewhere. Annualcreditreport.com gives you a full view of all 3 credit bureaus. Credit Karma only gives you a picture of your TransUnion and Equifax. And of course, there's Experian. So for those folks who don't want to pay, you can definitely download the Experian app and you can view your Experian FICO score. And just a quick disclaimer, the FICO score shows on Experian, okay? But on Credit Karma, it's only going to show your Vantage score, which they're just different scoring models, okay? But you're not looking at it for the credit score. You're really looking at it to identify what is on the credit. So don't pay too much attention to the score. That's just a good guide, by the way.
Okay. Yeah, that's good, because I know a lot of folks maybe don't know what app or what website is accurate to tell them the best information, right?
Right.
That's important.
Right.
And maybe also, I think another thing before we get in too depth into some other questions I have here, can you explain just for like the average person who maybe doesn't know, like what is utilization and why is it important?
Yeah, utilization. Let's talk about it this way. If someone says, "Hey, I'll give you $100 in credit," and they say the more you use, the worse your profile is going to look. So you say, okay, if you go out there and you say, I'm going to spend $85 of that 100 right away, that looks pretty bad because it's like, hey, slow down. You're using $85 of the full 100. You've only got $15 left. Relax. As opposed to someone saying, hey, here's $100, and you saying, okay, I'll just use $1 of it, or I'll use $30 here. I'll pay it back, and then I'll use $7. I'll pay it back. That shows not only responsible credit, but you're only utilizing a small portion of that $100 that you've been allotted. So essentially, in a nutshell, if you're allotted a certain amount of money, the more you use, the higher the utilization. The less you use, the lower the utilization. And typically, if you're using a lesser amount, the better the credit score turns out to be. Typically, generally speaking.
Yeah, I love that, and I think it's also worth mentioning for those who are watching. When you have a lower utilization, and you can correct me if I'm wrong here, but typically when you have a lower utilization, your credit score, right, it goes up because it shows that you're using credit responsibly. And of course, underwriters and lenders tend to look upon that favorably, right, because it's all about risk. And they show 100%. That potentially that you're a less risk for them, and so they're more likely to lend. So that's one piece, of course, that goes into the credit scores. Are you using credit responsibly, and how much of it are you using, right?
Correct.
Yeah.
Oh, yeah.
Okay. So one of the big questions I had down here was, in terms of just the general public and things that they don't know very much about, right? So, what would be like three big things that people generally don't know about credit repair, and things like that you think would be important for the general public to know, and specifically people who are looking to get a home loan potentially?
Yeah. So I think the three biggest things, and I saw this a lot in the auto industry. The first one I would say is your credit profile, your credit report tells a story, period. A lot of people focus on the score. While the score is important, yes, the score is important. Your profile means so much more. For example, if I'm in the dealership and I'm in the finance office, because that's what I did for so long, and I'm reading a credit report, and I can see that a person has had on-time payment history since this person has had credit. And then at a certain point, I can see, oh, wow, what happened here? You started to miss payments here. And then you look at another account at the same time, you start seeing missed payments at the same time on several different accounts. That makes me wonder what's going on. What happened in this person's life at this point in time that caused this person to begin to miss payments? So you start to put together this story. You start to see utilization. We just talked about utilization. You start to see utilization going up at that same time period. There's a story there, okay? You see this person having a lot of new accounts being put on their account around the same time. What's going on in this person's life? So it tells a story, and it allows for a greater conversation for someone like me to understand their situation, to be able to better help them. And that's what I realized. So it tells a story. Your credit report tells a story about your financial life. I think the second thing that most people don't know about is when it comes to credit is bankruptcies and student loans. You can get those removed off of your credit. You don't have to. I got to be careful when I say this, but they don't have to stay on your credit report forever like most people think. Okay, let's take a bankruptcy. Well, most people think that has to stay on the credit for up to 10 years. Not true. If you hire a credit repair company, or if you do it yourself, you can get that bankruptcy off your credit report in a month, 2 months, 3 months, however long it takes. That can come off. You don't have to struggle and live with a bankruptcy on your credit for up to 10 years. You don't have to. Same thing with student loans. Some people are stuck with student loans for forever, from cradle to grave. And you don't have to, because if you use credit repair, or whatever other method you're going to use, you can get that off of your credit report to improve your credit profile. So I would say that's the second thing. And the third thing, I think the third thing that a lot of people don't know is that a credit report is full of errors. The statistic is about 88%. 88% of all of the information on any one person, yours, mine, anyone's credit report, has inaccuracies. And for that reason is why credit repair works so well. There's inaccuracies, there's violations on the credit report. And those are the three biggest things. The fact that your credit tells a story, the fact that you can get those bankruptcies and student loans off your credit, and also the fact that, excuse me, the fact that, I forgot my third point. The errors, that there's over 80% of errors on anyone's credit report at any given time. So those would be the three things.
Yeah, I love that. One thing that I think that sticks out to me in working with so many clients that have challenged credit and so forth is that the things that are on the credit report, by and large, are not permanent, right? We're able to make changes and improve the credit. And sometimes I think you can speak to this, of course, because you're a credit professional. Sometimes someone's credit can be repaired or improved faster than they anticipated, right? They would think it would take years, and in reality, it takes either, a couple months maybe, or 6 months or something, right? Where it's possible. So that's a helpful tool, I think, for a lot of folks. It gives you hope, whereas previously you maybe just thought, well, you know what, I just can't do anything for another year or two.
Oh yeah.
Whereas reality, they may talk to you and say, oh, I didn't realize that it was actually possible to get across the finish line quicker than before. I hear that
all the time. All the time. I didn't know you could do that. I didn't know you could. Yeah, you can.
Yeah.
And this is the stuff people don't know. My wife is shocked at about how much stuff people don't know. When we first started diving into credit repair, uh, our minds were blown at what you could do with credit repair. Given the Credit Reporting Act and the Fair Debt Collection Practices Act, it gives consumers like me and you so many opportunities to improve our credit, and we didn't even know about it.
Okay, so this definitely begs the question now. Let's say, I'm somebody who needs to fix the credit and so forth.
Mm-hmm.
I'm probably listening to this now and I'm thinking, okay, Ervin and Aaron, all right, well, tell me how to do it then. If I've got negative stuff on my credit report, so maybe speak to that. How do I get stuff removed from my credit report?
Yeah, so we use there's a special way that we do. Now if you go to a lot of credit repair companies, what they'll do is they'll write dispute letters, they'll send them out to the credit bureaus and hope that the credit bureaus remove the items off the credit. Whatever strategy they're using, that's just what they do. Well, the best way to do this is not necessarily to write dispute letters and lying to them. That's what a lot of people do. They say, hey, this isn't my account, or I don't recognize this account. Come on. You know that account is yours. It's yours. So I stay away from that route. So what do? I would dispute these accounts in a way where I'm telling now every creditor, every person who's reporting an account to your credit bureau, yours, mine, everyone's, they have to abide by the Fair Credit Reporting Act. They have to. So let's take TransUnion, for example. If TransUnion is going to report something to your credit, it has to be verifiable and validated. It has to be. Because if it's not, they're violating the Fair Credit Reporting Act if it's not verifiable. That being the case, so I would challenge them on that. I would challenge them and say, hey, is this account verified? Did you verify this account? And the moment I dispute that account, what do they have to do? So this is what you would do. You dispute it. They have to conduct an investigation. According to the Fair Credit Reporting Act, they have to conduct an investigation. Now, once they go investigate, what we're hoping for, and this gets into our strategy, what we're hoping for is that they realize we can't verify this account, so they have to remove it. Now, there's a lot more that goes into that, but you start by disputing it based on verification. But you don't stop there, Aaron. You don't stop there and say, hey, I just want you to verify this account and hope they remove it. What you also do at the same, now these are tips and tricks that you don't find on the internet. This is stuff that if you read these two laws together, it's a godsend because it gives you so much information on how to do this. There's also an act called the Fair Debt Collection Practices Act. Okay, with this act, it says that if you're a creditor, let's take Capital One for example. If Capital One sent your account to collections, okay, now this collection agency is reporting to the credit bureau, to TransUnion. What you do now, at the same time as disputing with the TransUnion, you send a dispute letter to this collection agency and say, hey, I'm disputing the validity of this account. Okay, whatever the verbiage is, you're just going to send out that dispute. I'm disputing the validity. And they have to validate that they have to make sure that this is a valid debt. At the same time, they have to cease all collection activity. This is the Fair Debt Collection Practices Act.
Really?
Does that make sense? Mm-hmm. They can't conduct collection activity. But wait a second. If they can't conduct collection activity, then how can TransUnion conduct their investigation? Because TransUnion has to investigate. They have to contact this collection agency. But guess what? The collection agency can't conduct collection activity, meaning they can't discuss this with them. And if if TransUnion cannot do their investigation, then they cannot legally continue to report that account. Okay. Now, this is just an overall overview. It gets deeper than that, and there's more understanding that needs to be had on this information. But that's general outline on how to do it. You dispute with the credit bureaus and the collection agency or the original creditor at the same time. That's the approach that we take at Credit Hub.
And I imagine all of this stuff is, and I don't just imagine, I think I know that all these things are on the up and up, right? The processes you're taking are fully legal processes. They're ethical processes. There's no shady business going on. The reason I bring this up, of course, as you know, Ervin, is there's a lot of shady practices in this credit industry, right? Many credit repair companies will claim that they're helping you fix your credit, and in reality, they're not, right? That's one of the reasons I have you on here, of course, because I trust you as a close friend and somebody that helps my clients. By the way, I should also insert this here that for those watching, neither Ervin nor myself are attorneys or CPAs. So if you need to, consult them, you should. I'm a licensed loan officer. Ervin is a credit professional, so take it with a grain of salt. But in terms of everyday practice, it seems like basically there is a pathway forward to be able to fix someone's credit or repair or improve their credit a lot faster than they thought by using some of these methods that you've been using for a very long time, right?
Right. 100% correct, Aaron. Yeah,
Okay.
I tell my clients, I'm not an attorney. I can't give legal advice. I can tell you a lot about what has happened with my clients, with their attorneys during this process, and it's favorable. But yeah, I don't claim to be, and I really just claim to be a student of the credit world to help as many people as I can to improve their credit.
Yeah, I love it. So a couple other questions I have here pertain to just in terms of the overall credit profile. So I get this question all the time, right? As clients will ask, do I have enough credit cards? Do I have too many credit cards? What would you say is like sort of the secret sauce, if you will, if somebody really wants to try to get their credit score above a 740, right? In mortgage, we say 740 and higher is A credit, right? So as a credit professional, what is your prescription? Is there a magic, like a secret sauce to get the credit score above that 740 mark?
No, there isn't. There is no magic formula because truthfully, I've seen people, let's take the credit card example. I've seen people who 800 credit scores, okay, with one credit card, $5,000 limit. I've seen people, true story, I saw this guy, the most I've ever seen was 18. He had 18 open credit cards with huge limits, and he was also an 800. And I thought about that when I saw the guy with one credit card. I'm like, that's interesting. This guy has 18. This guy has one. This guy has high balances, over $100,000 balances, limits on his credit card. This guy has only 5,000. Yet both have 800 credit score. I think it comes down to, Aaron, what we talked about earlier, how credit scores are calculated. You've got to maximize each pillar of how credit is calculated. Payment history, of course, that's huge. Utilization, are you keeping that to an acceptable level? Under 30% is what they say. I like to keep mine under 20. The mix of credit, that's a big factor. Okay, if you have a nice mix of credit, meaning installment loans, revolving accounts like credit cards, installment loans like auto loans and things like that. If you have a good, you have auto loans, you have revolving credit. If you've had a mortgage or some kind of property loan for a property, that starts to give you a nice, well-rounded buyer profile or credit profile. So I think if you try to maximize those pillars of how credit's calculated, and if you just really get a nice mix of credit, I think that's really how you start boosting your credit to that 740 range that you're talking about.
So you don't think there's necessarily any time when somebody just has too many credit cards?
The only time I think that someone has too many credit cards is if they're showing irresponsibility. Okay, if you're irresponsible with one credit card, that's too many because you don't show responsible use. Like I said earlier, your credit profile tells a story. If you can show responsibility with 18 credit cards, and you can show that your limits, your balances are under 30%, and you're not applying for new credit every 6 months, if you can show responsibility, have at it. Because I think at a certain point, if you show that responsibility, your credit profile will show that. And lenders
Okay.
will show that, yeah, lenders can see that, wow, this guy's got 18 credit cards and he's under limit and she's this. That's what you want to look at. That's what you want to see. I don't think too many is the problem. I think irresponsibility with any amount of cards is a problem.
Okay. Yeah, I love it. Yeah. So let me see. I know a little bit of time here. We have about 5 minutes left. I want to get this question in though, because I feel like this is something that's a major concern for so many people, maybe not just in mortgage, but all over the place. And this has to do with inquiries. So can you speak on, not only the concern, but how do inquiries affect your credit score, whether good or bad, and, particularly when companies are pulling your credit?
Mm-hmm. So anytime you get an inquiry, it can negatively affect your credit. However, inquiries are just a small piece of the pie when it comes to how weighty it is, how much is weighted as far as your overall credit score. However, let's take the auto industry, for example. They're notorious for running your credit once, twice, 3 times, 50 times, and sending it to 100 different banks. They're notorious for
Wow.
that. Hurts your credit. That hurts you a lot because now you have, let's just call it 50 inquiries on your credit report. What are lenders going to think when they see that? Oh, this person's trying to apply for credit. Oh, he's applying for credit again. Again, it tells a story. What's going on in this person's life? Is he trying to live off credit? Risk. You mentioned it earlier. Yeah, it's a risk. It's a red flag. What's going on? So I think if you're applying for credit, you have all these inquiries back to back to back. The frequency is so close. That's a major problem. But the good news is, most of the time, what I've seen in my career, I've seen if you have all those inquiries, your credit bounces back, and that's not the end of the world because even inquiries can be taken off. You don't have to wait 2 years like most people say. You can get those suckers off in a week, 2 weeks, 3 weeks, 4, whatever the time frame. Those can also come off.
Wow, that's interesting. Okay, that's something I did not know, that you can remove inquiries.
Oh,
yeah. That's great stuff to know. That's why I rely upon you and credit professionals to do that. Even though I can help my clients to a large extent to help with the credit, but in many cases, I just want to stay in my lane, right? And just allow you, the credit pro, to take us to the finish line so we can accomplish that overall goal of getting the kind of credit that someone wants to get, right, for whatever purchase they're going for. Okay, right. So I guess let's see here. Before we wrap up here, I guess the last question would be, what is a good prescription, or what's your recommendation for somebody who has no credit at all? Maybe they're just starting out. Maybe they are young. Maybe they're 18, or maybe they were in the military, or for some reason they just didn't build up credit at all. What would be like some good pieces of advice for them to start building good credit so they can eventually get a home loan?
Yeah, I'm going to give you two things. I'm going to give you 3 things, actually. The third one's a bonus. The first one, you can go out and get a secured credit card. Now, a lot of people say that's cool, right? Secured card. A secured card, by the way, is a credit card that, let's just say you have $200 and you want a credit card for $200. You take your $200 cash, deposit it into that secured account, and now you have a credit card that reports to the credit bureaus. Okay, it's based on the money that you already put up front. Okay, so get a secured card. A lot of my clients use what they call a credit builder card. That one's huge because the credit builder card reports to your credit bureau twice per month to all 3 bureaus.
I didn't know that.
Yes, and if you want if you want that payment history, and they're reporting twice per month, remember, payment history is one of the main factors in credit scores, right? So if they're reporting twice per month to all 3 bureaus, that should start the ball rolling. Credit builder card is number 1. The second thing is I would look at is what they call Experian Boost. That's simple. You go to Experian, download the app. It's free. What you're going to do is you log in, create an account, and you're going to attach, whether it's your bank account or whatever type of accounts that you have, where you have bills coming out every month. We all pay bills. So if you have an account where your bills come out automatic or where you pay with your debit card every month, well, you attach that account to this Experian Boost, and now it searches your account and it says, this person pays, Netflix every single month. We're going to report this Netflix account every single month that he made a payment to his credit report. So now you get credit just for paying your bills. Now, some people may say, oh, well, what if I miss payments? They don't calculate the missed payments. They don't look and say, he missed February. Or, oh, that's bad. No. If you made a payment that month, they're reporting it. So Experian Boost is the second one. Mm-hmm. Now, here's my favorite one. My favorite one is going to be what they call Kickoff. Have you heard of Kickoff?
No.
It's an app where what you can do is you're not applying for a loan. They give you a loan. Let's call it $1,500. Well, they're not giving you $1,500. They report the $1,500 loan to your credit. You pay them back. Let's just call it, you can set whatever you want. Let's just say $50. You can set $5 a month until you pay back this $50. And then they report that this $1,500, first of all, you've been making on-time payments for $5 every single month. By the time that $50 is paid back, guess what? Not only do you get that $50, but they've also reported all these on-time payments, and it shows up as a $1,500 installment loan on your credit. Remember, we did a mix of credit. Now you've got a credit card, you've got on-time payments, and now you also have an installment loan. The only thing you're missing is go to Logical Loan to get your mortgage, right? Because that's going to give you that well-rounded balance of credit. So you've got Kickoff, which gives you that installment loan. You've got this credit builder card, and I forgot the second one that I mentioned. There's so many nuggets. There's so many things that can be said there. Sure. Experian Boost. Okay. Right. Now, and here's another bonus because I like giving people information. I know we got to get out of here. The other one's called Self. Self Lender works almost the same as Kickoff. You can except this time when you're done paying off that balance, that loan, they send you a check for that amount. If it's $1,500, they'll send you a check. Or if you opt out of getting that check, you can click a button and they put it onto a credit card for you. So now, whatever that loan amount was, you click a button and it transfers it to a credit card. Here's your credit card. Have a good day. So now you've got 4 pieces of credit. I would do all that right now.
That's huge. Yeah, that's huge. And what's funny is, I don't know about you, but years ago when I first started getting credit, I had no idea about these things at all. And I'm sure there's a lot of people out there that don't know it either. So that's huge value because I feel like the earlier you start, the better, right?
Yes. Oh yeah. Yeah. And it's not too late either, right? My a really close friend of mine, she was at this time, I think she was like 40 something, 50 something. Never established credit. She went to go buy a car. They said, you can't get a car. You don't have any credit. She says, what do I do? So what she did was she went to get a small loan first. She basically did what I said here. And within about, I would say probably 4 to 5 months, she was able to go get a car. So it happened that quick.
Yeah, I'll make one quick adjustment. If anybody calls me for a loan, of course, for a home loan and so forth, it wouldn't be through Logical Loan. Logical Loan is just a podcast. It would be through myself, Aaron Leitz at Barrett Financial. So that's, but of course, if they need credit repair, I'll definitely have them contact you. But Ervin, thank you so much for joining us, today. This has been amazing. How can people contact you?
You can reach out to me through my website, credithubpremier.com, credithubpremier.com. If you want to reach out to me by phone, you can reach out. It's 800-675-0423. You can also reach out via email, creditelect@gmail.com, creditelect@gmail.com.
Yeah, perfect. Folks, I'm also going to put all of Ervin's contact information in the description box below. Make sure to like and subscribe. This has been Aaron Leitz for Logical Loan. Thanks for watching.